Hey, welcome back to the Mining Pod. On today's show, we're joined by Pierre Rochard. He is the VP of Research at Riot Platforms. We brought Pierre on to honestly just talk through a lot of different subjects on the Texas Bitcoin mining market. We also talked about Riot, why it chose to pursue these convertible note structures versus just reinvest in Riot, buy shares, back, etc. And then we also talked about the Texas SBR, Strategic Bitcoin Reserve. Thank you, Pierre, for joining us on the show. Before we jump into the show, I just want to make a quick shout out to our sponsors for making the show possible. And if you're enjoying all of our content, be sure to check out Bitcoin Season 2 and The Gort Show. These are similar styled conversations, a little more personality driven, and those are on tech, VC research, things of that nature. So definitely go check out those shows. You can find all of this and more on blockspace.media. Okay, let's jump into the conversation.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to The Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
Hey, welcome back to the Mining Pod. On today's show, we're joined by the one and only Pierre Rochard of Riot Platforms. Pierre, we've never had you on, which I don't know how we haven't had you on. Welcome to the show, man. How you doing?
Thank you. Yeah, Bitcoin mining has a deep bench of talent, so I completely understand why I would be number 5032.
It's a bad look for the Mining Pod, I'm not going to lie.
No, you're fine.
Yeah, actually, we haven't had anyone from Riot on in a minute. I think Jason set like one of our all-time view records for the show. So we were just trying to give the other people in the mining space, you know, a chance to compete with his show. The last show we did, I think, with Riot. No, we had Brian on. Brian Morgenstern, your guys is like head of policy, so technically it doesn't count. But the Jason show was literally as FTX was collapsing. It was the day that Binance was trying to buy FTX. So that's always comes to mind whenever I think of doing a show with you guys. Yeah, that was an in-person show too. It was kind of fun. We were like chatting about it and like looking at our phones while recording. But yeah, welcome to the show. We have a lot to talk about. You guys have done the convertible note thing, like a lot of other miners. There's the SBR bill that Texas is putting forward. You guys are so involved with policy. There's things to talk about with that. And then I think just the general scene for mining is changing really fast right now, especially with this announcement we put out yesterday, this news we broke yesterday about Kengo, a Chinese automotive company that is now mining Bitcoin. But we'll just hand it over to you first. Quick intro for those who aren't super versed in all things Bitcoin. We have a larger CoinDesk audience that is sometimes new to these things.
So my name is Pierre Rochard. I'm the Vice President of Research at Riot Platforms. So before Riot, I was at Kraken. I was a product manager for Bitcoin and Lightning there. I've worked on open source projects in the Bitcoin and Lightning communities. And in a prior life, I was an accountant. So I started my career at Deloitte, auditing mortgage-backed securities and other esoteric asset-backed securities. And I learned software development along the way. So my educational background is in accounting, but I've learned a lot about coding through Bitcoin. And now here at Riot as VP of Research, I can get into how that role came about, but I don't want to ramble too long either.
I mean, we're on a pod. Time to ramble.
Okay, yeah, right. Sure. So I a long time ago, I was at a conference in New York. The audience members might be familiar with Mike Dudas. At the time, he was at Leading the Block, and he hosted a conference. I think this was 2018 in Manhattan, and he was kind enough to invite me to come speak. I spoke about Bitcoin maximalism, what that term means to different people, because it has, I think, a lot of different definitions, all still very relevant today, all still hotly debated. But I kind of just gave a lay of the land of this ideological sphere. And Jason Less and Jason Less was there. and Benny was there as well, our chairman of the board, and they were interested in, essentially standing up an advisory board to provide outside advice to the company. At that point in time, they were involved in a lot of different, ventures, and so I was on that advisory board with Corey Clipstein and Jan Pritzker, who are now at Swan. And we really, our advice was to focus on Bitcoin mining. And that's what Riot ended up doing. And I think, the credit really goes to Jason Less and Benny for assembling a Bitcoin focused team in a time where it wasn't obvious that Bitcoin was going to be the winner, or that publicly traded Bitcoin miners would, grow into multi-billion-dollar corporations. At times, Riot, was really in dire straits financially, and so they had a vision for how to develop this industry here in the United States. Jason, I think, was in particular influenced by the block size war and seeing the role of mining in that discourse. And he really wanted to see more Bitcoin mining happening in the United States, so that there was not so much centralization in China, which was the issue at the time, right? Now, with we'll call it the ban on mining in China. I know now that term could be hotly debated as well, right? Some people say it was just a pause; it was like a regulatory thing or whatever, or some kind of corruption or whatever. But I don't know. Regardless, lots of Bitcoin mining came to the United States due to that. Lots of mining rigs came to the United States, and a lot of them ended up at Whinstone. And Riot acquired Whinstone, the Rockdale facility here in Texas. And along with that migration of mining hash rate to the United States came concerns from Senator Elizabeth Warren that Bitcoin mining was growing too quickly in the United States. And so she started sending strongly worded letters out to Bitcoin miners, publicly traded Bitcoin miners like Riot. And that, I think, set off some alarm bells. And a lot of feedback from investors also was that they were concerned about the regulatory risk, right? The journalists and politicians would occasionally comment on the energy consumption of Bitcoin mining and how that was a problem. So with that in mind, Benny and Jason, I think this was maybe 2021. I'd have to go, look back at a calendar, but this was at the Miami Bitcoin conference. They asked me to come in-house to be their VP of research, to be able to provide some a response that is data driven and that is grounded in facts, but also forceful, right? That the truth is on our side, and that we have to have something that's intellectually honest and direct in response to what Elizabeth Warren was accusing us of, and standing up a public policy shop. So we went out and hired Brian Morgenstern. He stood out as somebody who understood how DC works, understood how public policy is shaped and influenced, and he really hit the ground running. It started with education. He already knew a lot about Bitcoin and Bitcoin policy, so he didn't need a lot of coaching from me. But obviously, I'm always happy to talk about Bitcoin, so I talked his ears off about Bitcoin and all the different issues the way I saw them. Kind of the Bitcoiner perspective on all this stuff, and that the next step was just developing those relationships. So Brian went out and developed relationships at every level of government, right? Because when we think about public policy, it's not just federal policy. So at the federal level, though, which is very important, the Digital Chamber of Commerce with Perry Ann Boring stood out as a organization that was really having substantial influence and educational opportunities for legislators, for staff, policymakers in general, regulators, and that they have a spine, right? Which is that they stand up for the industry. They're very clear about what our lines are and where we stand on things. So, and then at the state level, Lee Bratcher at the Texas Blockchain Council has stood out as a leader, and Brian joined their board of the Texas Blockchain Council so that we could be helping develop state policy, which is crucial for Bitcoin mining. A lot of policy for Bitcoin mining is related to the grid, with Riot's business model of at-scale grid mining here in Texas. And so making sure that we have alignment from policymakers that we are good grid citizens, we're doing the right thing for everyone, and overall our effect on the market is extremely positive. So, that came through not just joining Texas Blockchain Council, but also, direct lobbying and getting education from Texas A&M University, from other stakeholders to inform the process there and put out fires as needed and advance policies. And then there's the local level. The local level is just as important as well, right? Because you want to make sure that the community is happy with what you're building. And these are substantial investments, capital investments that we're making into these communities. And so we want to make sure that they see the benefits as well, whether it's for local tax revenue for school districts or sales tax revenue or business development, because we're buying from local contractors, we're hiring local employees, and we're keeping money in those communities and helping, rural communities that frankly have, in some cases, been abandoned by past industries. And so it really is a story of revitalizing those rural communities. And Brian did a fantastic job and continues to do a fantastic job of helping shape the landscape there as well. He hired Sam Lyman, who has put out some great thought pieces on the Strategic Bitcoin Reserve. At the same time, behind the scenes, Sam has been really active at every level of policymaking and supporting Brian. So now, Riot's public policy shop, because of the investments that the company made, I think it's one of the leading policy shops in the industry. And that, something else that is really important when we look at all of these different layers is that the company, when we look at who was running in the presidential election, right? Kamala Harris versus Donald Trump. And when we compare their policy agendas for Bitcoin mining, it seemed obvious that the company had an interest, not just, a self-interest, right? That we want Riot to do well in the United States, but also an interest in good policy, right? Like, we think it is good public policy for the public, for the United States, to be friendly towards Bitcoin mining generally. And so that's why we supported President Trump in a lot of different ways. One of the major ways was setting up a PAC that is for the Bitcoin Voter Project, where Brian was not only able to activate voters, but also get donors to pay for TV advertisements for Bitcoin-friendly politicians. And so, helping contribute to that victory at the federal level made it such that then, Trump, and I want to give Brian credit. Lots of people deserve credit for Trump being orange pilled, right? And I think I want to shout out for David Bailey in particular for running the Bitcoin conference and creating an event where, Trump would be excited to announce the most bullish policies that, the Overton window would ever allow at this point in time, and arguably outside the Overton window, right? Expanding it some. That set the tone at the state level as well, where you have Texas Republicans who might not be super excited about Bitcoin, but they are MAGA and they are America first, and they want to support Donald Trump's agenda. And so they, all right, let's bring all the Bitcoin mining to Texas. And so that I think, it's been really impactful what Riot has done in this area, and continues to do and will continue to do, especially now that we can move towards more constructive, positive policy changes rather than trying to defend the industry from Elizabeth Warren.
So on that note, I'm glad that you're bringing up the E word very early on, and also just some of the hostility that the Bitcoin mining and just wider crypto ecosystem faced over the last administration. Just to highlight a few things, you mentioned Elizabeth Warren. She was one of the cheerleaders of the anti-money laundering bill, which was a fancy way to mask a bill that would basically have forced anyone running a node and potentially miners to become money transmitter businesses. Just some like absurd over-regulation. Then you obviously had other things going on in the background and kind of the shadow realm that were almost in some ways more worrisome because they weren't public, like Choke Point 2.0 and all of these federal agencies kind of cracking down on the industry in arguably unconstitutional ways. Obviously, the crypto industry and Bitcoin industry in tandem had almost an existential question to answer with this election. And I think you saw that in the funding that we saw pour forth from the industry into super PACs and other political donations, Bitcoin and crypto companies and donators. I think in aggregate, it was like $245 million over the course of the 2024 election cycle, which, if I recall correctly, was maybe the like Bitcoin and crypto were like the largest industries represented from an industry standpoint in terms of fundraising. So this just leads to my next question with regards to Trump and the incoming presidency, and also a red House and Senate. What is Riot and maybe yourself and just, industry adherents expecting in terms of changes? What do y'all see coming down the pipe? Another way to frame this too, going back to the existential question, are we expecting more positive legislation and policy, or are we just expecting not to get killed, right? Is it good just because the hostility is easing, or do y'all actually expect positive policy and legislation with regards to Bitcoin mining and the wider Bitcoin industry?
Yeah, my response is why not both, right? And I think that the fact that we no longer have a whole of government assault, a weaponization against the industry is fantastic. And the fact that the pendulum is swinging in the other direction, where people are talking about day one strategic Bitcoin reserve executive order, people are so that I think is it's just icing on the cake, right? It's the cherry, and that is that is Elizabeth Warren's fault. I mean, the fact that all of this is blowback, right, on her plan to attack Bitcoin. I think that's poetic justice. Now, it's a perfect storm, right? Because it didn't necessarily have to play out this way, in the sense that Kamala Harris could have come out and just tried to outflank Trump on Bitcoin and crypto and said that, hey, look, this is something I fundamentally disagree with the previous administration. She didn't want to draw any contrast with the past 4 years. And I understand why, from her perspective, she's trying to maintain that Democratic coalition and make sure that her base turns out for her. But I don't think that her base would have said, oh, okay, well, because she's pro crypto I was going to vote for her because I'm pro choice, but now I'm not going to vote for her because she's pro crypto. It's like, no, that calculation, that's the same kind of miscalculation where they're like, we can't do 3 hours on Joe Rogan. It's like,
right.
Yeah, you kind of
that's going to turn people off, not the fact that they have a seething hatred for Trump,
Yeah, exactly. And so I think that it was not the world's best run campaign. And so now going forward, Democrats have a reckoning. If they can replace their leadership with more pro crypto candidates, folks who are more tuned in, younger, like with the zeitgeist, and that are charismatic and, channeling some 1990s Bill Clinton energy, they can. This doesn't have to be a partisan issue, right? This can be a bipartisan issue, and they can try to outbid each other on the size of the strategic Bitcoin reserve.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
I want to talk about the Texas local level, which you brought up. Texas has their state house open in the beginning of the year, and we're expecting some bills to go through that, some proposals that will be pretty important for Bitcoin mining, to my understanding. Can you speak to that? Last year, we had some really important ones, and a lot of the important ones that were negative got shot down, which as cheerleaders of the industry on this show, we were thankful for. But for Riot platform's sake, like, how do you guys look at the bills that are going to be introduced in this spring session for the Texas state session, or however they call it?
Yeah, absolutely. So here I've got to start with some context, which is Winter Storm Uri in 2021. A whole week in February, our power was out. And I'm here in Austin, so my power was out for a week. I had a newborn baby. At the end of the week, our water went out. It was, a survival situation that has had very intense political ramifications at the state level here in Texas, where the grid is a very hot button topic that is heavily debated. And part of that debate is just how much the grid composition is changing. So it's changing on both sides of who is producing electricity and how, and who is consuming electricity and how. And having all of these changes happening at the same time, while everybody wants 24/7 reliability, it creates a lot of different stakeholders at the Capitol trying to, get their way. And so when we look at Bitcoin mining here in Texas, the legislature, in terms of what bills have passed, has been supportive. And so, they had a bill last session that was about flared natural gas and helping people develop Bitcoin mining on that. And so that actually passed, right? And so the negative bills don't pass and the positive bills do pass has been kind of the trend from last session. We expect that to continue because of our advocacy efforts, but also because the truth is on our side. And so what we've seen is that there are, there can be some concerns about 5 gigawatts of Bitcoin mining coming to Texas. That's currently what's on the grid, but also concerns about future growth. And combined with future load growth from AI, combined with load growth from oil and gas, which is currently electrifying the oil fields, the pumps out in West Texas. It's a huge trend. And so that is, so all that to say that I think that there will continue to be negative proposals. So don't be surprised when they come out. But in terms of the actual politics of whether they get passed or not, I'm very skeptical that they get passed. And we still have to do the education, right? Do the groundwork. So shout out to Lee Bratcher and the Texas Blockchain Council for being at the forefront of that. The metaphor sometimes I like to use is like, if you have a Premier League soccer team against a 5-year-old soccer team, which side is going to win, but both sides still have to play. Like if the Premier League doesn't play, then the 5-year-olds do win. And the 5-year-olds being the people who they view Bitcoin mining as creating stress on the grid. And so they see it as a negative. But I think that the better understanding of it is that it's actually stress relief. And so during peak times, Bitcoin miners turn off. And then outside of those times, they're consuming excess electricity. So in any case, that is the challenge. Now, the other part of it is the intermittent generation, right? So Texas has a lot of wind. The fastest growing generation resource in Texas is solar. There's a massive growth of battery capacity, grid scale battery capacity. And Texas policymakers, when they look at the development of intermittent, they're worried about what happens if there's no wind and no sun. Do you have enough batteries? Do you have enough natural gas power plants? Do you have enough nuclear power plants? Do you have enough load curtailment, whether it's from Bitcoin miners or from people's air conditioning, right? So demand response programs. And they're worried of a shortfall. And so that's the blackout scenario that they want to avoid because there's a tremendous political cost attached to that. Since Winter Storm Uri, they've been maximizing reliability. Now, the really hard part is that reliability comes with a cost. And now they're worried about the cost being too high for Texas consumers. And they're also looking at what happened more recently of local outages in the Houston area from storms that didn't get repaired very quickly by the transmission and distribution companies. And I don't want to get into that debate because I'm not here representing Centerpoint or anything, but so they've got a lot on their plates. And this session, I don't really understand why Bitcoin mining would even be a policy priority from an energy perspective. The policy priority should be transmission and distribution, and then making sure that the Texas Energy Fund is financing the appropriate amount of dispatchable natural gas.
So that's a really good point that gets lost in this conversation a lot, especially with people not plugged in. I was on a podcast the other day with this guy named Jarrett Vaughn. He's a professor in Vancouver. And he was asking me about Bitcoin's ecological impact. And my answer to him was Bitcoin's ecological impact is only as green or, brown, if you want to say that, as a grid's, distribution of energy, right? Depending on what's on the grid, that's what Bitcoin mining is going to use. Depending on what's available, what energy is not being consumed at that point. So on this note, talking about shortfalls in Texas and talking about the demand for AI and Bitcoin, maybe in the jurisdiction of Texas specifically, and in that context, what do you think is going to happen over the next decade as Bitcoin miners and other energy consumers butt their heads against this AI behemoth that is coming? I mean, you mentioned it earlier. Texas has a lot of wind, a lot of solar. If you go to the EIA and you look at the projects being built out all across the nation, the majority of them are green energy like solar and wind, right? Are we going to start getting serious about baseload again? Do you think there's going to be a rubber meets the road moment? Is that already happening? What's it going to take for a state like Texas to start building more dispatchable natural gas and maybe even something like nuclear for baseloads? Are we there? Or is that going to start happening over the next decade?
Yeah, I think we're there. So there's the Texas Nuclear Association is rapidly gaining steam, and it looks like they're going to be putting forward a program to make sure that Texas has the next generation of nuclear power, and that on the natural gas side, I think that for the Texas Energy Fund, they had $30 billion worth of applications of people looking for financing to build natural gas power plants. Then when you look at, so Texas, they say Texas is deregulated. I say Texas is very well regulated, meaning that the electricity power producers are competing against each other, and some of them are publicly traded. And when you go look at their stock price, they're doing great. They have all the capital that they need to be able to build new power generation. The challenge is the lead times, right? How long does it take to build 1 gigawatt combined cycle gas turbine? Generally, you're looking at 3 to 7 years. Now, Texas does have an advantage because it is faster to approve projects than other jurisdictions, but there's still a long lead time. I think I think long term, there will be an abundance of electricity here in Texas from a combination of natural gas and nuclear baseload, and that there will be a continued growth of solar, especially in the short term. So in the short term, like what is getting deployed this month? More solar. When we look at the peak during this summer was 21 gigawatts. The peak last summer was 14 gigawatts. So solar is growing far faster than Bitcoin mining is even. So are batteries. And so I think in the short term, the bridge technology is solar. And what that means for AI load is they've really got to think about flexibility. And one way to be flexible is to bring your own generation. So quite often these data centers, they have a backup generator on site. It's there for when the grid collapses, right? Or their transmission line gets cut, and then they turn on their backup generator. Well, what if we redesign the market so that they could turn on their backup generator when electricity prices are high? Just that way, they are actually using that asset and monetizing it and contributing back to the grid in a free market way. Currently, it's just not done. It could be, it's completely feasible. And at the retail level as well, of saying, oh, you have a Generac, on the side of your house. What if we turned it on for 30 minutes, during this time during the summer because of solar ramp down? So I think that the technology, obviously people talk about it with batteries in cars, right, contributing back to the grid, batteries at the home level. I think that those assets should continue to be monetized. And I think that there's room for the legislature there to kind of help from a regulatory perspective to create more what they call distributed energy resources or virtual power plants.
What do you think about SBR? Lee Bratcher in the TBC put forward this, and it's going to be in a proposal for the spring. Can you detail this to us? And then any thoughts from Riot's position on Texas possibly being the first state to get a strategic Bitcoin reserve?
Yeah, so just zooming out, I think that up to this point, all the debates in public policy have been about the costs of Bitcoin, right? What is the cost on society of Bitcoin's use for criminal activity? What is the cost of Bitcoin on the environment? What is the cost of Bitcoin on the grid, right? So there's been a focus on debating what are the costs of Bitcoin. And the SBR introduces a new high-level debate of what are the benefits of Bitcoin, right? Why is Bitcoin good? And I think that is the shift, the vibe shift that we want. To me, it's almost secondary whether the SBR gets passed or not. Like the important part is that now our policy education process involves talking about the benefits of Bitcoin in a way that maybe was not emphasized as much in the past. And so I think that Texas is really well positioned. I think that Representative Capriglione's proposal is very sensible and is aligned with, I think, where the rest of the Texas legislature or the majority of the Texas legislature is on this issue. And so I hope that it gets passed this session and kind of lays the groundwork for future Bitcoin accumulation here for the state.
Do you think that a national strategic Bitcoin reserve is something that will actually ever happen?
Yeah, I think it's going to happen day one if I were to handicap the odds. Now, what does that look like?
Pierre's mega bullish. I love it.
Well, yes and no, in the sense that they can just say, we're not going to sell any Bitcoin.
Right.
And that's our strategic Bitcoin reserve, right?
Yeah, right.
All the way to like sailors like Mega Bull, hey, they're going to buy 1 million Bitcoin or something like that, then obviously the price would react to that. But I think that would require a legislative mandate, and maybe that I would handicap at much smaller odds, right? So probably 15%.
Dang. I like how you framed it, that you're like, it doesn't really matter if it happens or not, at least we're having the conversation. Speaking of strategic Bitcoin reserves, we got to talk about Riot issuing this convertible note. So I'll read the headline. This is in NASDAQ. Riot Platforms buys 667 BTC for 67.5 million. Total holdings now 17,429 Bitcoin. I believe you guys did a prior convertible note as well for 594 million in aggregate. And these are all these convertible notes that MicroStrategy is using, Mara, CleanSpark did when we did a show on that. And you guys decided to buy Bitcoin with it. Can you walk out the details again for us? And then I have a few more specific questions around why you guys are buying Bitcoin.
Which is today, right? And so so that's, I think, from the company's perspective. I think that from a capital markets perspective, there is increasing interest or acknowledgement that Bitcoin's not going anywhere, and that Bitcoin-backed securities are a interesting area to be in from an investor perspective and from a trader perspective, right? So we've heard about the traders doing the convertible bond arbitrage, and it's something that Saylor has talked about a lot, and it fits into basically this idea that when we look at the investing world, the highest risk is the equity, right? That's always the highest risk of the stack of the company. Not talking about derivatives, and it's interesting because Bitcoin has had derivatives for a while, right? We had CME futures for many years now, and the SEC was artificially blocking equity ETFs for spot for so many years. They should have approved it in 2014 when the Winklevi twins proposed their first ETF. But what that caused was a lot of pent up demand for equity securitized spot Bitcoin. And so that's why BlackRock, took the market, and now they are just absorbing Bitcoin faster than we would have expected, right? I think that the success of the ETF has exceeded people's expectations. It certainly has exceeded the financial, experts' expectations who thought Bitcoin was just tulips. The next step in terms of the risk ladder for Bitcoin is fixed income markets, right? So when we look at whether it's a convertible bond or any other kind of fixed income security further up the stack, the investors, they have to start asking themselves the question of, well, do I think Bitcoin's going to zero within the next 5 years? If not, then I should be willing to lend against it within some risk parameter, right? So in the past, we saw lending products like Unchained, for example. You could borrow against your Bitcoin. And I think that side of the capital markets is going to continue to mature to where you're going to have better and better terms on lending. And eventually you get to a point where if you can have a 5-year maturity, and Bitcoin has never gone down over 5 years, right? And you can borrow against it at a great interest rate, then it just becomes self-evident that you should have some amount of leverage. And so I think that big picture, that's kind of where a lot of the capital markets activity is happening, is in the recognition that, some amount of leverage on Bitcoin can work as long as the terms are done in a way that's responsible and is kind of clear about and transparent about what the price risk is. Like, where is your leveraged Bitcoin if Bitcoin goes to 30 grand in 5 years, right? Which could happen, but it's probably not where the market is. Like, the market doesn't think that's what the outcome is going to be.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Okay, so it's a leverage play. Why would you guys choose to purchase Bitcoin at spot versus just continue to invest in Corsicana and Rockdale? You guys have Corsicana is going to be like the largest data center in the world when it's done, right? So like it's a huge facility. So why not use a convertible note to continue investing in that infrastructure versus buy spot at the moment?
So we're investing, full tilt in Corsicana and in improving Rockdale as well, and so and in expanding Kentucky, and so those capital projects are fully funded. So there isn't like an ability to be like, well, if we spend more dollars on this, will we get more exahash? It's like, no, they'll spend it on a sculpture, some architecture on the property or something. It's
Statue
like,
of Jason.
Literally you can't put more money into it.
You could, however, like buy back shares of Riot or something similar, right? So did you guys look at those sort of options, and how did you think about pursuing different things on the market with that capital? Is the convertible notes like really interesting in the fact that only a select grouping of miners with enough volume and liquidity are able to pursue this, and Riot is like fortunately one of those companies. But what was like the decision process where it's like buy Bitcoin, buy Riot shares back off the market, fund excess growth somewhere else? Like there's a bunch of things you guys could have done. So I'm looking at some of those things as well.
Yeah, so our strategy is to be a Bitcoin platform company that accumulates Bitcoin on the balance sheet. That's our strategy. And so to us, like Bitcoin is the most undervalued asset in the world. And that's why it makes sense to take, the whole amount that we raised and to increase our stack by basically 50%.
Just with regards to this play that a bunch of miners have been doing recently, as well as Riot, like Marathon did something similar, Hut 8 did something similar, CleanSpark did it, but they're not buying Bitcoin with it. They're buying back shares, kind of per Will's point there. All of this, though, is taking a book from, or taking a note out of MicroStrategy's book. Kind of a two-part question. Why are we seeing this now from Bitcoin miners? Is this simply just because Bitcoin's in a bull market, so it's easier to finance something like this? Secondarily, is this just the start of a larger trend with Bitcoin companies and companies in general?
Yeah, I think that just like with public policy, it's about education and time, right? That Saylor has done a masterclass of education for the capital markets on Bitcoin. And so he's done the rounds on CNBC and on Fox Business. He was on Tucker. He's gone on so many podcasts, just being very transparent and forthright about his view on the value that he's creating. And that education, I think, combined with the outcome, right, which is that he was accumulating during the bear market. Donald Trump wins the election. Bitcoin price starts going up, and Saylor's, approach to accumulating Bitcoin, the results become self-evident. And so then it's like, how much more education does Wall Street need than just seeing, MicroStrategy stock price going up and realizing that, hey, like there's something that we missed with the Bitcoin story here beyond just the Bitcoin ETFs. And so I think that then that creates a flywheel where you have convertible bond traders who are saying, hey, this is working out really well. It's proving itself in the market. We'd like to buy more. Let's find, ways that we can have more convertible bonds in the world. And an obvious way to do that is to have Bitcoin miners helping, develop that part of the capital markets. Having the same kind of volatility with regards to Bitcoin.
Okay. Colin, unless you have anything else on that, I want to pivot to some other questions, and I guess I
have a kind of a philosophic question. This is burning a hole in my brain.
Colin.
And I think this is a good question for you, Pierre, because you come from an Austrian background. You're one of Bitcoin's, I would say, premier proponents online in terms of espousing the benefits of a system, a monetary system, financial system, moored in kind of Austrian principles. I can't help but look at what Michael Saylor has done with MicroStrategy and this whole idea of convertible debt to Bitcoin as being kind of late stage fiat games. So I would just ask, like, is that wrong of me to kind of think that way? And if it's not wrong, is there a consideration where you just have to play the hand that you're dealt? And so there's not really a moral weight to add to this? Because I can't help but look at it as being like, okay, well, at the end of the day, what you're basically saying is you're going to issue convertible debt that can then be converted back into shares, and you're going to use that debt to stack a hard asset, right? But the actual productivity going on in the background does not exist outside of actually taking custody of the world's hardest money. Am I making any sense? Like, do I just need to get off my podium? There's something that feels about it sometimes when I think too hard about it.
Yeah, that's a great question, because you're not a fixed income portfolio manager or like a hedge fund trader, right? So like to you, it's like if I was explaining how cars work to somebody who is a train conductor. You know, they'd be like, yeah, but you know, if you had tracks, wouldn't it be better? It's like so it's just a different audience, right? And it's about meeting people where they're at. Like these people, they want a different risk profile than spot Bitcoin, you know, self-custodied on your cold card. And so it's like, okay, well, do I want to say, no, you're not allowed to earn that return. You're not, or the only Bitcoin return you're allowed is spot Bitcoin capital gains. And that we're not allowed to slice and dice that into different risk buckets to say, okay, this person wants to say that they want to earn 6% and they want to bet the Bitcoin will never go below 50 grand. This person wants to take the opposite end of that trade and borrow at that rate and lever up. And they think Bitcoin's going to outperform. Now, the only way that this trade, you know, which is basically saying, let's arbitrage between the capital gains that Bitcoin has had historically, right? That's the risk, is that you're saying that history is the best guide to the future. And what if Bitcoin's rate of return going forward is lower than what it has been in the past, or has a different sequence of returns such that you're going to have people defaulting and getting liquidated? That would be the negative outcome, right? The positive outcome is that Bitcoin's rate of return continues to be what it has been in recent history. I've heard different numbers floated, but you know, people will say anything between like 20 and 50%. Right. So if that's the like rate of return on holding Bitcoin in terms of capital gains, and then you want to say, well, okay, let's package that up and say, all right, this slice will get 5%. This slice, you know, lower risk, they'll be the first to get repaid. This other slice will get a higher rate of return because they're taking on more risk, because if, you know, they'll absorb the first loss, then it's an arbitrage between 5% and 50%, right? And that the only way that gets resolved is through spread compression, right? So either the rate of return on fiat increases and central banks increase interest rates so that they're paying out 20%, or Bitcoin rate of return comes down to earth, right? Of like diminishing marginal returns. Bitcoin's rate of return comes down to like 5%. And that only happens through massive adoption, right? Where there's now a ceiling on adoption. Like we can't have more adoption, you know, as Trump would say, like, stop it, you know, enough adoption. And so I think that that's how that arbitrage ends up. Now, for folks who don't like finance, don't like fiat interest rates, all this stuff, like they can just look the other way and stack sats on their cold card. I completely understand that perspective. I was born in this, right? Like, my first job was at Deloitte auditing mortgage-backed securities. So this kind of stuff, like, I find it fascinating intellectually, just like I do a step-down transformer on the electrical grid, going from 400 volts to 100 volts. It's like it's a really interesting concept, and I think that it's actually a great metaphor for what these securitization deals do, is step down high voltage Bitcoin to be a little safer for those who don't like volatility. That's been the number one complaint about Bitcoin. It's too volatile. Okay, let's make it so that the maxis who think it's going to take over the world, they'll underwrite all the volatility risk for you, and then you fixed income investors can have a low volatile instrument on the other end.
Colin, was that a strong answer for your philosophical question?
Strong enough, yeah.
Strong
I think
enough.
you could have an entire pod on this, though.
I mean,
look, eventually Bitcoin gets full adoption. There's no fiat anymore. The process has played itself out. But it's going to be. I thought that would happen in 2015. Now here we are 10 years later. It is slowly happening. So my baseline expectation is that it will continue to slowly happen. Gradually, then suddenly, as Parker Lewis puts it.
Last question I had for you is moving out of Texas into Kentucky side. So that news happened a while ago at this point, maybe a few months ago, which is, years in Bitcoin mining. Riot's always been a Texas company, like through and through, and you guys still are, but you've somewhat abandoned the home base. How are you guys thinking about expansion within the United States? And is there ever going to be international plans at all?
Yeah, so Riot started out in Oklahoma. Then we moved to New York. Then we moved to Texas. And what we found in Texas was a really great environment from a both economic perspective and regulatory perspective. And so we're going to continue to invest in Texas. That there's zero doubt about that. And then it's looking, at opportunities where, hey, does the team in Kentucky, they've got a great cultural fit. Like, they've got a great approach to mining. It's aligned with Riot's ethos of doing this responsibly and doing it at scale. And so I think that it's when the right opportunities are there, that Riot has a great capital markets team that can execute on them.
Love it. Colin, any closing thoughts for us?
No, I think that does it. We covered a lot of ground. Really appreciate you coming on, Pierre.
Yeah, Pierre, thanks for your time for the holidays. We'll probably put this out over Christmas break, so people can sit down, learn a little bit more about Riot. But anything before we close out on your side?
No, thanks for having me on. Always happy to talk about Bitcoin mining, the grid, Riot, capital markets. Lots of exciting things happening, and wish you all a happy holiday.